Before we get started, I want to remind all participants the purpose of this presentation is for informational and educational purposes only and should not be construed as a recommendation or to purchase any or sell any security. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security, especially microcaps. I want to thank the MicroCap Club community for tuning into our 26th business breakdowns. And my tag team partner for this conversation is Sebastian Krog. Sebastian is a private investor. He also writes on his Substack called Treasure Hunting. Sebastian has been a member of MicroCap Club since 2021. The business we're breaking down today is BluMetric Environmental, which trades under the symbol BLM on the Toronto Venture Exchange, also under BLMWF on the OTC markets. The company operates two complementary divisions. The one division is an environmental consulting business where companies, municipalities, countries, even governments hire them to solve environmental problems. Many of those problems relate to water treatment, which feeds nicely into BluMetric's other division, which focuses on water tech systems. So there's a significant kind of cross-sell synergy or opportunity there between those two divisions. The company's only a 30 million USD market cap, so it's a tiny market cap, but its management team and business punch above their weight. The business is currently generating around 50 million in annual sales. It's growing rapidly, and they have operations in the United States and Canada. We have the CEO, Scott McFabe, and CFO, Dan Hilton, with us today to run through the business and answer any questions. Scott and Dan, thanks for joining us today.
Pleasure. And thank you so much for having us. I look forward to our conversation.
Scott, maybe before we get into the presentation, I think you joined as CEO in 2018. I thought it might be good for you to talk a little bit about your background and why you joined the company when you did.
Happy to. So a little bit about me. I've been in the water business going on 39, almost 40 years as a consultant, as a business leader, kind of standing on the shoulders of giants in my career. I've been very fortunate in that I've worked, started out at the University of Waterloo Center for Groundwater Research here up in Canada. Spent 24 years in the U.S., lived in Chicago, worked all over North America and overseas on various water projects and running and growing, turning around businesses. And after finishing a stint, turning about a 5-year stint at a West Coast, 100-year-old West Coast water consultancy, was tapped for curiosity about coming back to Canada and helping BluMetric Environmental. And the nice thing about that was a lot of the people that I graduated with originally from Waterloo, they were all founders and owners in BluMetric, and they had their struggles. There was no question that they were in a bit of a bind. Really not a great spot, in fact. And so they tapped me and asked me if I would consider stepping in and coming home. And so I don't know how you all feel about it, but I know that there's no better opportunity than to work with your friends and to help them realize what they've yet to realize in terms of the value of their ownership, which I felt at the time was highly undervalued, not necessarily well run, but it just best of intentions, but not a well run company. And so my wife and I moved back to Canada, up near the Ottawa area, which is where the headquarters for BluMetric is. And when I first came, the company was in a real bad spot. I think we had the market cap was very low. I think 3 million, 4 million. I think we had $5 million worth of uncollateralized debt, and the stock was around 10 cents, 8 cents. And so what that calls for is really reorganizing the company, focusing it, de-risking it, getting that debt paid down, clean up the balance sheet, base it baseball, as I call it, and just really tightening things up and getting it ready to go. So a lot of austerity, a lot of hard decisions. We cut certain things out of the business. We had an operation down in El Salvador that made no sense. We basically gave that to an El Salvadorian, which is who it should have been owned by in the first place. We just weren't equipped to do work there. And then our water tech side of the business really needed to focus on what it needed to, and that was really being if not the water expert for the Canadian Department of National Defense and our water tech solutions. They've relied on us for a long time for that. And then the consultancy is really getting it organized and focused on better client base and driving it forward. And so all good news, and that certainly not all to do with me, but people really got on board. Within about 5 years, we had no debt. We had a lily white balance sheet, cash in the bank. The stock was starting to show promise, and so we got through our austerity years, and then it became very clear that yes, you have cash in the bank and you've got a clean business, but now what are you going to do with it? And that's the fun part. And that's when we tapped Dan to see if he would be interested in coming on board. So maybe I'll just pass it over to Dan.
Sure. Thanks, Scott. So, CFO by training, I'm out of Deloitte, CPA, did my grad school at Cornell. Most of my career has been in that smaller public market segment. I think I enjoy from go public up to about 1,000 employees. That seems to be my sweet spot, and I've had a lot of success in that area. The last business I was involved with was a managed service provider, one of the largest in North America. We serviced 2,500 senior care facilities throughout North America, and we sold that to one of the large carriers who wanted to get into that space. We grew that business from about 30 million, so similar size to BluMetric, to 180 million over 4 years. It was a tremendously successful exit for everyone. And I found myself, I think, fishing on the dock after that transaction, and was introduced to Scott and the BluMetric story. And more than anything, I think it's the canvas that appealed to me. Scott did a tremendous job of getting the business to the point where it was debt free, strong revenues, fantastic culture, good people, and a lot of hooks into some interesting projects that we have here in Canada that we want to expand globally, including the military. We are the primary supplier of water technology to the Canadian government. And there's opportunities for us, and you'll see during the presentation here ways we think we can leverage that across all the NATO countries. So I think for me, it's tremendous growth opportunity. And what I love is the stage that we're at, this opportunity to take something that's really stable, good working capital, and just create opportunity by looking for strategic ways to growth, not just organic growth. So really excited about the journey. Thanks, Scott.
Yeah, thanks for that background. Really appreciate it. Just as a reminder to the audience, if you have any questions during the presentation, feel free to click the Q&A button on under the Zoom screen there, and you can populate your questions there, and then we'll get to them at the end of the presentation. But for now, Scott and Dan, why don't you run through the presentation, and then we'll do the Q&A after.
Sounds great, Ian. So I don't need to read forward-looking statements. I think everybody understands that we're not going to overdrive our headlights on this conversation, and we're going to stick to our current results and do our best to answer your questions, but certainly the standard disclaimer. So let's talk a bit about BluMetric. We've been around almost 50 years, by the way. This is not a startup company. The RTO happened a little over 15 years ago, where the consultancy bought a small water tech company on the TSXV, and that's shortly after that. That's when I became involved as their CEO, our CEO. But we're really a leading water technologies and environmental engineering company, and we really want to focus on challenging environmental water problems. Not just always stock and trade stuff, but we often say is the work that we do is meaningful and valuable. And that's a if you have that opportunity in your life, that's really quite a good thing, because it really helps us get up in the morning, and the people we have, our culture, really live and thrive on that. And the vision is really to aspire to be the environmental solutions and water tech company for those that really want to positively impact the people and the communities we live in. We really have that deep in our heart. You meet our people; they really are great people. They all want to do the right thing. They want to make sure that they always leave it better than they found it, and make a difference. But we're also good business partners too. That's part of our vision. We really want to make sure that we're working with our clients and understand their challenges and help them advance as it relates to our business and theirs. So over 6,000 projects completed, well over 109 water tech systems deployed, currently with full-time equivalents around 220 people, 10 offices, 3 manufacturing facilities, one down in Gainesville, Florida, 2 up here and around Ottawa. Our trailing 12-month revenue right now is about 55, almost 56 million. And our trailing 12-month EBITDA is around 2.4 million. So that's currently our snapshot. So what makes us valuable? Really, we focus on benefiting from global sustainability, water scarcity, and military demand. Those are our big tailwinds. pretty much a lot of what we're doing is coming up with resilient solutions to the changing environment that we find ourselves in, relative to water scarcity, but also the global and macroeconomic conditions related to military demands. Our strategy focuses on long-term profitable growth. We like to keep it in the black, provide a diversified client base, which gives us a resilient business. Really important. I'll show you our 4 key market sectors we work in. We think we're at a key inflection point. Our water tech growth investments are paying off nicely. We'll talk a little bit about our strategic acquisition of Gemini Water down in Gainesville, Florida, about almost exactly a year ago, and our record sales order from that. Goal to increase recurring revenues. We understand that this business can be a little lumpy and there's ups and downs, but we have strategies to try and manage and balance that out. We'll talk a bit about that. And definitely we have geographic expansion in mind. Certainly in the US, we only have the 1 location in the US right now, but my history there and understanding that market and realizing that, there's a lot of change obviously going on right now, but with change represents great opportunity for us. So a bit about our solutions. I'll talk a bit about the pictures on the left, but we'll start on our solutions for the USA and Canada. Really, we talk about, we say mission-ready water. That's the stuff that the package systems you'll see on the bottom left, those 2 pictures. These are containerized units that are militarized for USD or for the Canadian DND and other NATO countries. Water purification. We also do wastewater as well. Seawater desal, membrane bioreactors for wastewater treatment. We have fixed and mobile systems. The stuff that Florida does in the Caribbean and the South are really in-ground fixed systems. The stuff we do in Canada are mostly agile mobile systems. The mobile systems translate excellently into the mining sector for effluent and water treatment. We're building an operation and maintenance business in the South. We have one in Canada that supports our systems for the military. That's a big part of smoothing out our revenue. On the professional services side, you have water resources, environmental engineering, compliance type work, site assessment remediation, and industrial hygiene, health and safety type work. So there's a bit of a flywheel here where we're working with our clients, solving their problems with professional services, listening, adjusting, and then applying that to, if we can, our water tech solutions if necessary. Picture at the top left is a mine up in the Labrador Trough in iron ore facility. That's a water and a wastewater system that was all package built down in our facility near Ottawa, shipped up on a rail, dropped on a site, plug and play. We need a better picture of a water intake in the Caribbean, but that's just a small one. We're doing one for St. Kitts that's about 2-inch diameter, but that's turning seawater into potable and irrigation water. And then, as I mentioned, those are the 2 other systems at the bottom. The one is our large land-based system, and then the bottom one is a brand new kit that we're developing with Rheinmetall in Germany, which is half-sized, and it's the brand new one for Canadian DND and other NATO countries. 4 key markets: commercial, industrial, government, military, and mining. So in terms of strategy, we'll start with, why did we acquire Gemini? In our water tech systems, we were heavily into military, spilled into mining, but those are big projects that have very long sales cycles. Gemini, on the other hand, are all commercial, industrial, and government type assignments, and those are literally from a desktop to in the field, turning the tap on within 10 months, give or take. So very, very fast sales cycle, got a great reputation. And so that smooths out that business for us, and I think that decision is really paying off nicely. In terms of the professional services side, it's a standard type system or standard type services, across the board. Some places we really shine is in very northern work in Canada. We have a lot of work, say north of 60. That translates nicely for the current military environment, trying to develop plans and systems and infrastructure to support the protection of northern sovereign waters. But really across the board, you see there's a balance between all those 4 markets. Usually 3 out of the 4 are fairly robust. One may be lagging, but overall, it does give us some nice resiliency. And this is by design. When I first came to BluMetric, I think they thought we were working in 12 different markets. And the reality is for our size, we could barely service 4 if you organize them rightly. But we have leadership for each market, and we have strategies for each market, and they all work well together. And I think the outcome is really good. Percentage of revenues, if you look at how it all shakes out, especially now with Gemini on board, almost 60% of our revenues from commercial industrial, 15% government, 20% military, and about 8% mining. Spent a lot of time in the first 8 years just improving our base of business, our book of business. This is just a quick selection of a few of our key clients. So the message here is we've gone from, in many cases, mom and pop clients to real marquee clients that appreciate our value proposition and support us. And a lot of these are long-term, standing, developing relationships. And that's where you get, you pay attention. That's where you get your recurring revenue at a very high return. So we say, a bit of the preliminary conversation about me coming to BluMetric, we say building off of years of discipline and austerity, leading up to 24, it was all about stability, de-risking, profit, organic growth, and extinguished debt. And then we're pivoting in 24, not to lose that discipline, but really to expand responsibly geographically, invest in manufacturing, scale that well, make sure we pour our time and our money into our people, new tech products, BD. We weren't known as the most aggressive business development team, but we're improving there, I think. We bought Gemini for sure, and then our sales pipelines continue to develop. And then 25 onward, we definitely are going to focus on operation and maintenance, especially for Gemini. Gemini was really a company that focused on the design and install execution of desal and wastewater systems, but they didn't offer the follow-on work for operation and maintenance, which most of the clients want us to do. So we're pivoting on that, and we're adding that roster. We've got an expert we brought in from, it's basically an old friend of the original founder of Gemini. They worked together, but he was in Australia, and he is an O&M expert on staff. We probably put $500,000 into investing, developing our O&M business for Gemini. And, the kind of examples I could give you for that is one of the key clients is Carnival ship lines, cruise lines. They own, I think, 7 or 8 islands. Each island has its own port. It has its own wastewater system, has its own irrigation needs, water supply for, 2-acre, 3-acre type pools. And it all requires our expertise, and it is not in their wheelhouse to want to necessarily operate those. So we're pushing hard to see if we can turn that into nice recurring revenue for the business, and plenty of that to go around. Definitely securing our military partnerships and growing what we do with Rheinmetall, one of the largest international consolidators and integrators of technology, based out of Germany, but we work with the Canadian operations, and that's going very, very well. Also, we have a budding relationship with Thales from France. That's a huge consolidator as well. We just had a $3.8 million contract we're executing with them on some new technology for extending the life of water infrastructure in shipboard systems and improving water quality as well. So that's a great new one. It's top secret. We can't really talk much beyond that, but it's in very high demand and very new. We say selective M&A. We'll talk about what our strategy is for that, and then can't not focus on organic growth and recurring revenues. It has to continue. So what are our tailwinds? We'd say at least 6. We say economic uncertainty creates new opportunity. We don't run from it. We run to it. We find ways to adjust. We're not going to be complaining. We're going to find ways to turn uncertainty into new opportunity for the business. And I think Gemini is a great example of that. If you look at military demand for decentralized systems, the ones that we develop right now, I think we're on the forefront of that. Certainly in Canada, we lead that market, but we're really trying to garner interest on other NATO countries, and that's starting to develop as we speak. Industrial fixed and municipal fixed water treatment systems. Gemini is much actually better at them than we are up in Canada, but there's great cross-pollination between the businesses. They don't do anything for the military. We hope to in the US, but it would be through Gemini, not through us in Canada. We realize it's critical for the business environment in the US right now. And vice versa, we can translate their know-how on big fixed systems up here if we need them. Water scarcity, conservation, humanitarian relief efforts. All of our systems speak to all of that. And with global climate change, that's sort of the last one I'll jump to, but it's in critical demand. Impact of emerging contaminants, our systems can manage that, and we can always bolt on and improve on what we need to. There's a lot of flexibility in our design if necessary. But at the end, the impact of global climate change, whether you believe it or not, it is changing. And having resilient engineering and systems to be able to speak to that is really key to our solutions. And so that's a big part of our strategy. Levers for growth. If you looked at us a little over a year ago, I'd say about 2/3 of our revenue was from professional services, 1/3 was from water tech systems. This year is probably going to shake out 2/3 of our revenue is from water tech systems, 1/3 from professional services. That's okay. We try to find a balance. The water tech systems, the margins are a little lower than professional services, but when you bundle it all together, it does produce some nice resilient revenue production and sticky revenue. And so we're looking to continue, a balanced approach. We realize water tech is far quicker to scale. But then again, our M&A pipeline, we don't always have the opportunity to pick timing. When opportunities present themselves, we assess and act if necessary or if right. But right now, we've accomplished what we wanted. We've got a much better balance in water tech and professional services revenue. Organic growth in both. Organic growth, for instance, for Gemini after we acquired them, is really 100% or better. They had a run rate of around $7 million US top line when we bought them. Current run rate for revenue for them is around 20 million, and that's because we moved them into a facility that was 10,000 square feet into a proper one that was 25,000 square feet. We doubled their staff with skill set that included an investment in sales, an investment in O&M, and all of those things. But it's paying off. That's a key part of our M&A strategy: is what's the organic growth after they become part of our organization. We're very selective with M&A, and want to make sure that we maintain very high discipline on that, based on inorganic growth opportunities that really will be accretive. We look for quality assets that want to be part of us. And again, of course, we talked a bit about recurring revenue. We really need to expand that in both of our lines. Priorities: Water Tech Canada, long-term military, definitely. Gemini, diversify our markets, increase our sales in the US, start our O&M offering, strengthen professional services sales and BD, and then wastewater solutions for industrial and commercial developers. So a lot of stuff going on in the southern US, as you all probably know, where there's a lot of interest to expand and grow industrial or commercial clients beyond the reach of urban utilities, where we can provide both water and wastewater on site, specific to the needs of the facility, independent of that. And that's definitely a high value add. Long-term growth strategy: again, selective M&A and organic growth, expanded product offerings, manufacturing capacity, infrastructure investment. We're doing all of that. Selected geographic expansion in Canada, US, and the Caribbean. Strategic key hires. It's really, at the end, it's all about people. That's our secret sauce. Things, the systems don't design themselves. Client relationships don't happen on their own. It's really important we retain and encourage the best to come to us, and we think that they like our culture. New sales and repeat business with existing clients is key. I mean, our retention rate, especially on the professional services side, is over 90%. So most of the clients that work with us like us. So at the bottom, we call these ambitions. We don't give a lot of guidance to the markets because we are who we are and the size that we're at. But Dan and I and the team, we definitely have ambitions to get to 100 million in revenues. We definitely see the need to get at that scale around 10% EBITDA, and while we're establishing recurring revenue streams. So it is a resilient business. So, currently we'll talk about, where we're at, but that is definitely within our reach. Talked a little bit about our strategy for M&A, definitely strategic fit. We first and foremost look at the people and the culture. If that's not right, it's not even worth talking about. Dan and I have been through too many M&As where it's all about the numbers and not about the fit and not about the future. And it has to be about fit and future. Unlocking the potential organic growth that wouldn't have been realized unless we were involved and had the backing to make great things happen. Gemini is a great example. And we also want to see a history of profitability. At the end of the day, we want to know that the people that we bring into and the organizations we bring into our business really understand the need to be profitable in the black, to be healthy. The case study for acquisitions, with Gemini, we talked a little bit about it, doubling their headcount, transition from a 10K facility to 25K, as we said, the run rate up to 20 million from 7 million, and really making it a key manufacturing hub to diversify and protect against trade barriers. There's no question that it has to happen. And so we have done all of that. I think it's going to be a hard act to follow, but not an impossible one. I mean, these opportunities do exist. One thing I often say to the investment community is don't be disappointed if we don't do a deal in a year, because we probably said no to 3 that we needed to say no to, but when we say yes, it's a full yes, and it's for good reason. So we really want to be, as we say, prudent and opportunistic with all of our capital allocation. We know how hard it is to get there and make sure that it's driving returns and excess cash. Say profitability creates opportunity. This is a bit of a bar chart that shows you kind of step changes as we improve the business back to, say, only 2019, where we're running around 28 million. Then we step up to around 35. We bring Gemini in, and we're, run rate currently, trailing 12 months is 55 million, while staying, positive EBITDA. It's key. It's critical for us to make sure that we run this business in a fashion that stays in the black while we grow. It's not easy to do. Sometimes the EBITDA will suffer a little bit at the expense of growth, but it shouldn't be. We don't forget about it. It's hard to grow the top line. It's a little easier to tighten down with austerity and improve the bottom line when you've grown the top line. But you can see here how we've stepped forward in a very pragmatic fashion to run a healthy business and grow it. So lots of multi-year investments, bringing Gemini in and making sure that we fulfill our promises, and we have. I think if you talk to the original owners, they'd say, and they have said to us, everything you said that was going to happen did happen, and everything you said you were going to provide us, you provided us. And as a result, we're very happy with that outcome. And then the integration. One thing is you see here we've maintained the Gemini name and brand because that is the value. We fully understand that ego shouldn't drive integration. The value here is, and who is known as the Gemini brand, and that's what our clients know, and that's what they're buying. And eventually they'll get to know BluMetric, but it isn't our ambition to, just slap BluMetric's name on top of Gemini and really drive a hard, push a hard driven mandate to make everything, capital B BluMetric. A bit about the team. We've got, I'm very proud of this group. This is not a group of amateurs. There's a couple 100 years worth of experience looking at you right here. And that's just not Dan and myself. Jody, if I'll go across the top, Jody Johnson, she runs the operations. Dean Bedford, he is the original owner of Gemini down in North Florida, North Central Florida, Gainesville. Corey Switzer, he runs our water tech in Canada. Just a great young fellow I've got a chance to mentor since I got here. He's just knocking it out of the park. The bottom tier line that's our board. Ian Moore McDonald on the audit committee. Ian Murray McDonald, he is one of the founders. He's been with the company for 40 years. Ian and I have known each other over 40 years. He's one of those people I mentioned to you who've right out of Waterloo is a international water expert. Wanda, she came to us. She's government or governance committee. Dr. David Rudolph, he is a internationally renowned water expert, also out of the University of Waterloo, and he taught myself and Ian Murray. He's still a tenured professor at Waterloo, but he was joined our board about a year ago to really drive us to think about better water solutions. Just a brilliant guy. And then Mosa Mortada, I mentioned, he's the former chief of staff for the Southern California water districts. Mosa's current budget, I think, is $55 billion. He looks after every water district from LA down to the Mexican border. And but he is my former partner from a previous S Corp when we were in New York City. And just a terrific guy. I don't know how else to put it. And I'm so fortunate to be working with the people here and others that you see, because it absolutely is not all about me. It's about the team that you see in front of you and the qualities that they all bring to the table. And so it's a very strong management team we have. We're very fortunate. And this was, I think, it might have been Ian's idea. I think, you had to pull a comp table together, and we try. Just to give people an idea of where we sit. Are we, everyone wonders, are you overvalued, undervalued? Well, everybody has an opinion how that should be assessed. But if you take a look at us just on, enterprise value to sales, I'd say we're a little low. If you look at our growth year over year, it's good, excellent. That's just for the company as a whole. If you look at our professional services side of the business, still pretty low in comparison. But we're still on our growth curve. It's still early in our story, I guess is what I would say. We don't get too wrapped up around this. I mean, we want the numbers to speak for themselves, and we want to be overly promotional. We like to undersell and over deliver, but it's just to give you an idea of where we're headed and how we think we compare to others that do what we do. Look at our cap table and insider ownership, sort of start in the middle here. Insider ownership total is around 43%. Management and boards about 8%. Current and former employees, partners, insiders, founders about 35%. And then the rest is as you see, we're currently fully diluted shares around 42 million. Market cap most recently is around 47 to 50 million, give or take the day. If you look at our performance on the right-hand side, last 5 years, that's a pretty good return. And we're happy with that, but we're not sitting on our laurels saying we're done. So to bring it in for a landing here, to take you back where we started, why would you want to invest in BluMetric? I think if you believe that there's a need to address global sustainability, water scarcity, and respond to military demand, those are all strong tailwinds, and they're not going away. And we're well positioned to not only currently playing in it, but grow our business as a result. Long-term strategy, we're going to grow our top line, but we're definitely not going to do it and completely forget about our bottom line and profitable growth. We know about austerity. We also know how to apply it. And we understand that will be a focus in our next fiscal year. Proven diversified client base. We really want to make sure we have a resilient business here. This is not a story that's going to end next week. This is business been around 50 years. It's going to be around another 50 if we do our job. We do think we're at a key inflection point, especially with our water tech growth investments. Bringing Gemini was a big part of that, but we're far from done. And we really want to make sure that we focus on the recurring revenue side of the business to make sure that's kind of the mortar and the bricks. Make sure that that's there to keep this business tight and make sure that we stay in the black and take some of the spikiness out of it. And then we're only a few points on the map. We need to see geographic expansion in some parts of the U.S. and other parts of perhaps the Caribbean and Canada. And Ian, I'm going to stop there. Open it up for questions. So I think probably good for me to stop share. Is that okay?
Yeah, that's fine. I wanted to remind everybody again, if anybody has a question, feel free to input it in the Q&A button on the Zoom screen and we'll get to them. But I'll hand things over to Sebastian to get started.
Thank you, Ian, and thanks for the presentation, Scott, and also Dan. So I thought maybe I start off with with your Gemini acquisition, and obviously it's fair to say it has been a very successful acquisition so far. Can you maybe explain a bit more what exactly drove the revenue increase since acquiring the business at 7 million to now, I think you said annualized would be around 20 million, if I'm not mistaken. So yeah, can you give a bit more color on that?
Yeah, I'll start, and I'm sure I'll forget something, and Dan will fill in the blanks here. But we were presented Gemini as an acquisition opportunity through a broker, and we often turn those, we'll evaluate them, turn them down. But when we first saw the cut sheet, the thing that jumped out at us was this is a company that produces in many ways, what we produce in a market we need to be in geographically. It is really a one sole owner in the company who is in dire need of some capital, and at a stage of his life that he's not going to take big risks and shouldn't financially. And the reputation was great, but there was a great backlog. I think they were a little concerned about delivering on growing, but really kind of reticent to do so because you had at that stage of entrepreneurialism, you kind of put one foot on the gas, one foot on the brake, and when you're involved with a bigger enterprise that supports you wholeheartedly, then you have the opportunity to do what we've done. So the conversations that we had in due diligence, once we understood their business, was, we often say, dream a little bit with us. If you could have whatever you would want, and you could bring whoever you wanted to, we say, let's bring the band back together. What would that look like? And they immediately had very key asks that were very pointed and very rational based on the business in hand. And so I think Dan and I went back from our meetings in Florida because it was a competitive situation. There were 6 other suitors. And we said, if they like our culture, if they need support, we have the ability to do that. And we think if we can lean in and not overmanage and put them in a far better position where they can actually execute on what it is that they have in hand or need to grow to, then we'll see a great result. We didn't at that time say this should be a $20 million a year run rate company. We said this has got great bones. It's got it's got a great brand, and the people are really, really quality. So if we pour into them, we should expect to see a really good result. And I think the numbers speak for themselves. Dan, I'm sure I missed something.
Yeah, for sure. Happy to add a little bit more context. So when we acquired Gemini, there was no outbound sales. All of their growth, all of their revenues to date have come from inbound unsolicited requests just based on the reputation they have in the marketplace. And to Scott's comment earlier about climate change, let's not quibble over why there's climate change, but the reality is over the last few years, sea level waters are increasing and the rain patterns are changing. And all of these Caribbean islands, coastal communities in the United States, that well water is becoming brackish as the sea forces itself in. And then you've got a problem. You can't use the wells anymore. And so this inexpensive solution we have that Gemini's created for desalination, inexpensive desalination, is a prolific solution that'll be applicable all throughout the Caribbean. And so we see huge opportunities. So for us, I think the challenge is capacity, not so much demand for the product. We have brought in a full-time salesperson to manage the pipeline of opportunities, and we are trying to grow the business in a very responsible way. We don't want it to run away from us, but some of the comments that Scott made about doubling the square footage, we have done that. We also have first right of refusal on another 25,000 square feet that's adjacent. And so it's really now just about taking the business on at a pace that we can accommodate the HR needs of that business. So people, we're in a good community in Gainesville with the University of Florida. So as long as we can get the technical skills and the people trained up, it's that pace at which we can grow the HR side of this that I think that's going to dictate the pace at which revenues grow within Gemini. So it's a good story for sure.
Maybe to double down on the sales aspect, how do you go about sales and marketing? Is this going for RFPs, or how can we think about your sales efforts on Gemini?
So I'd say a couple of things, Dan. I'd just add, and then you could definitely jump in. But their reputation is really, really good They are highly known because the people that have been working there have been working within the Caribbean and southern U.S. and that part of the world all their career. And so that's number one. Number two is they've got a business model here that's a little bit disruptive in that um, typically the way the workflow would be, you hire an engineering company, they do the assessment, they do the design, they go out to bid, you win the job and then you execute it and then move on to the next one. Well, Gemini is in a position where it's all bundled together, and where we do the engineering, we have the experience to know what works. We can size it and execute a design successfully and repeat. We don't have to reassess every single setting to know what works. In many ways, that's their secret sauce. And so the disruption is the positive disruption is we can go from desktop to the field to turn the tap on within, in many cases, 10 months. The old way of doing it could take you 2 years. And these are dire situations. Like the island of St. Kitts was down to only having 12 hours a day available water. That was it. And that's not unique to St. Kitts. That's Nevis. That's a lot of other places. They have the same general issues, the same general challenges as Dan mentioned. And so, with our ability to bundle the assessment, the design, the execution, the delivery, and then the O&M, that should represent growth, and that is an edge for us compared to a lot of the competition. They know what works, just like Gemini knows how to make something work in the Caribbean. Up here in Canada, we know how to make it work in the Arctic. And so we can come up with a solution pretty much in just about any climate to be able to address the challenges to produce clean water or treat wastewater. So it is an advantage for sure.
Sorry, do you want to add something, Dan? Otherwise, I would double down.
Only that the St. Kitts project that Scott mentioned, it is a flagship product for us. It's a 2 million gallon per day capacity desalination plant that will, provide water to 70,000 people. The scale of that contract is ideal for us. That's sort of the range we want to replicate. And so there are a number of large water conferences in the Caribbean that are coming up this spring. We'll be participating in all of them. And we have the support of the St. Kitts government, and we'll be showcasing that solution and trying to repeat it, throughout other islands.
Without getting too technical and losing me on the way, probably, it sounded like there's some technical differences between building a water tech system, maybe in the Arctic in cold climate versus the Caribbean, and that the Gemini is kind of obviously more focused on the Caribbean climate. So, what are kind of, in a very simple terms, explain to a non-technician the differentiation between these?
I say that foundationally they're very similar in terms of the main components that you need, but the really the art of making it work in different climates is understanding the setting in which you're designing to and how to execute. So the materials, for instance, that you would use down in the Caribbean have to address things like the high degradation rates of, direct sunlight, like you see in the Caribbean versus in the North. It's how do you come up with a cold water package that I can draw seawater out of the ocean in Iqaluit on Baffin Island and make sure that the piping in the building stays warm enough to produce the water. So it's the materials, it's just the operational challenges, it's all of those things, and then come up with something that will produce a longevity in the solution too. It's one thing to put it in the ground, but it's another thing to come back 10 years and it's still operating. And so that's all experience. You can't put a patent on experience, but when you have people on your team that have done it for all those years, they know it works. And how the way it is I'll listen in or Dan will listen in on a client call, and you may have a designer or an engineer from California that wants to put something in the Caribbean, and they think they know what they're doing, and then you hear the questions that are being asked by Gemini. Have you thought about, well, you're going to put in a 5 acre water feature on this resort? Do you realize that you're going to lose by evaporation 150,000 gallons a day of water just by evaporation, and you're going to need irrigation, and you're going to need potable water? They don't have that experience. They're only based in what they know. But when you bring in a team that's worked in those environments as long as they have, that's really a big part of the value add.
I think also, just to tack on to that, the professional services nature of what we have is very complementary. So you can imagine in each of these regions, environment is a concern to any government, and they're only going to let you go so far without doing a certain number of a certain degree of assessments of your impact on the environment. So coastal considerations, how you're going to draw the water can be a real consideration. And so managing all of that is a critical part to these projects.
Okay. While we're already kind of technical, we got a question from the audience saying that it looks like most of your system are reverse osmosis based. What technology is advanced subunit water purification system?
Okay, well, yes, they are. It is a combination of ultrafiltration and reverse osmosis. We also have the ability to bolt on different components depending on the water quality if we need to further amend the water based on a client's need. And that just means we also have flexibility built into our systems. But the new ones, the advanced systems, the smaller systems that we put together for the military, that's the Rheinmetall contract. The client was asking for a system that was far more agile. Like the big ones that we've been producing for 20 years, we've been told by the military, the beauty of them is they're resilient, they're easy to operate, they don't use a lot of consumables like filters and so on. We have backwashing circuits that we can use with ceramic filters, so we're not having to constantly bring in consumables and make waste, or else you shut down. You're only as good, the system's only as good when it's producing water, and our systems produce water continuously. So we can backwash them and still operate. But when you put all that together, the systems that we produced for the Army were huge. These are things you have to bring a crane operator in on a trailer, and you drop them next to a water supply, and you put the tube in the ocean or whatever, and you produce water. They wanted one that was half its size, that would fit on a trailer, that would be able to do all the same things, only better, but be scaled back. And so these units, the new ones that we're producing for Canadian DND, have high value and high interest in other countries, because that's what they need. They need something you can hook up to a truck, pull it in, start producing clean water immediately. And so that's really the key. It's mostly all the same resiliency, all the same simplicity, and just make it more agile.
And ruggedized.
Yes.
Okay, perfect. Then on your presentation, it said that focus on driving or increasing recurring revenue. By my understanding, especially when you acquired Gemini, was basically just project-based business, while on the professional service side, you do have a high percentage of recurring revenue. So what is the plan? How do you plan to increase recurring revenue for Gemini or in general in the water tech business?
Sure. It's O&M, operation and maintenance, for sure. When you design and you execute on a system and then you hand it over to a client, they often will reluctantly accept that, and then they try to operate it. That's an ancillary part of their business, but it's not their core business. They'd rather somebody else operate it. And so Gemini's done very little, if any, of that. So we've invested $500,000 this year in expertise and writing programs to be able to market that to clients where we have sold into them systems they currently have, and say, we'll just take them over for you. We'll have operators on site. We'll be able to make sure the systems operate as they need to. We'll have remote systems we can dial in and check on them, telemetry. Things aren't going quite right, we'll be able to talk you through it, or we'll be able to know that it's time to send somebody out there immediately and address issues. But it's basically we will design, execute, and then operate and maintain those systems. The operate and maintain, those are long-term standing contracts that are year over year, where you've got real people on site making sure those systems do what they're designed to do.
Perfect. I think during the presentation you touched on potential O&M opportunities with the cruise lines.
Yes.
Can you maybe touch a bit on how big of opportunity or how these contracts could look like in the future?
Sort of rules of thumb. I'm not going to get overly analytical about it, but usually the year over year annual spend for operation and maintenance is about 15% of the capex of a project, and that'll go for say maybe 10 years.
Mhm.
So once you put in, your $10 million facility, that's 15% of that is what you probably will have on an annual spend to make sure that it operates the way it needs to for the next 10 years or longer. So we look at that and say that's a whole lot to leave on the table. Back to Carnival, for instance, we use as an example. We do know that they've got quite a few islands and they have quite a few systems. So does Norwegian, so does Disney, they all have sort of destination islands where they operate out of. They all have facilities there that they would really rather someone else. And it's our impression based on those conversations, they'd rather someone else run them, and they focus on their business. But they're large. I mean, the systems that they have are good sized facilities. You look at something like Atlantis, for instance. There's a great example where that's a stranded asset without water and wastewater operating and making sure those systems. The other part of this is there's a lot of aging infrastructure we haven't even talked about, that there's systems that have been around for over 10 years that they need to be replaced. And so those are entry opportunities for us to come in and say, we'll change it out and we'll operate and maintain it for you. And here's the design, the build, and then the operation and maintenance.
Okay, perfect. And obviously, M&A will be a cornerstone on your strategy going forward in terms of achieving your goal that you laid out, your long-term goal. And with Gemini, I think you probably have learned a ton about acquisitions and what to focus on and how to integrate them. So how do you think, how unique was that Gemini setup, as in finding a company that you were able to basically double in size? And how many Geminis do you think are potentially out there from your first
Okay.
investigations?
Well, I have to be careful how I answer that one, Sebastian, because I don't want to oversell what we're
Yeah.
capable of delivering on. I think Gemini is a great example of what can be done through the selective process of finding somebody who really wants to be part of you for the right reasons, and then being good for your word, executing on the promises of the capital you're going to invest in, the support they're going to see, in the back office they never had, and getting over any concerns about going from a private entity to a public entity. That all has to be in place. And some are going to be, more successful than others. I would say the base case will be a profitable company will come into our enterprise and be immediately accretive. They won't have debt. They'll produce cash, and that's an add-on. The best case would be something like Gemini, where you really have this phenomenal, almost catalytic response to investment and support that is it produce a fantastic outcome for us. We're always looking for more Geminis, but the nice thing too is now we're developing some I would call it M&A gravity, where our reputation is starting to produce opportunities for us to be approached by others that want to be part of our enterprise. And so it's nice to have that kind of interest. But at the end of the day, if it doesn't pencil out, if it's, like we say, we don't look for fire sales. We're not looking for fixer uppers. We know that the time to turn that around, the resources to turn that around, the disruption that it presents is just not worth the effort. And then the last part of it is we've studied how other M&A exercises have been executed by others that we're compared to. And the ones that are most meaningful to, I think, to the shareholder base aren't the small little ones. It's the medium to larger ones that are well thought out and executed on that make the difference, that you're really showing growth, that you're showing resilience, you're showing sustainable, addition to the business. That's all also part of it. But I wouldn't put myself in a position to say the next one's going to be exactly like Gemini. We hope it will be, but at minimum, if it comes in and they're a strategic add to the business, they're profitable, they fit and they have a future, then that's good.
Yeah. Okay, perfect. Would there be any synergies? I think Gemini has this manufacturing facility in Florida. If you would acquire something in, say, California.
Absolutely. I think one of the interesting conversations to say that Mohsen Mortada and we have is he's amazed that what we can do for the price point that we can deliver in the Caribbean for the kind of systems that we're producing and how that fits within the competitive landscape in California. Now we understand that the headwinds for executing in California or the West Coast, it's going to be permits and applications and studies and so on. That's definitely a part of it. We can deal with that. But to put a 2 million gallon per day system like we're putting in St. Kitts for, say, 14 million US, in California, that same system might be 50 million just because of the nature of the environment. So I look at that and say, our disruptive way of going in with a confident design we know we can execute on, maybe partner or find a candidate opportunity that would fit within our interests in California, we could be extremely competitive. And again, that's all just based on the ability to confidently execute on the basis of a high level of experience. We don't have to do it the old style. We can get out there and make it happen pretty quickly if we've got motivated clients and motivated agencies to work with. And again, Mosen's a great person to get that kind of advice. You can say, find us the three water districts that need a 2 million gallon per day system that are motivated to make it happen and need a competitive position. We're there.
Yeah. Okay. We got a couple of questions on the Gemini and water tech front, so I will ask those, and then maybe we can also talk a bit about your professional service side. Okay.
Sure.
Um, okay. So you have doubled your staffing with Gemini. Do you feel you have adequate staffing in place, or you're still hiring?
I'll let Dan speak to that one because he is probably more directly involved on that front than me in terms of the hiring side.
Yeah, so we think it takes about 6 months or so for someone to go from no knowledge in the space to being fully competent in terms of being able to assist, whether it's on island or in our shop with the fabrication of the equipment that we're putting in. So we've gone through this rapid growth phase. Those people are going to become more and more efficient in helping us to deliver product over the coming few months. But we are actively looking. If you go to our website, you'll see we always have 3 or 4 key positions that we're looking for because we know the demand is there for the product. So I would say we're certainly adequately staffed at the revenue levels that we're at. However, we do believe that business has capacity for growth. In the current 25,000 square foot facility, they can accommodate, we believe, about 30 million. So another 10 million or 50% growth in that current space. And then, as I mentioned earlier, we have right of first refusal on a adjoining space that's another 25,000 square feet. So we don't want to make that capital commitment at this stage, but I think sometime this year that will be on our plate to look at that for future expansion.
And in what areas are you hiring mostly right now?
Fabricators is the big thing right now. We've definitely on the more expensive roles, design and that sort of thing. I think we're fine from that perspective. A lot of what we build is a repeat of what's already gone out into the field, and our Canadian operations are very sophisticated from that perspective as well, and they work together. So on the design side, I think we're in a good spot. On the sales side, I think the individual we have is plenty at the moment. On the O&M side, there'll be some junior, locally engaged people that will be required as contracts get landed, and we determine that we need some local personnel. Most of that will be done remotely. But in terms of fabrication, it's the actual fabricators. So these are people that are really good with their hands. They can weld, be taught to weld, pipe fitters, those sorts of roles that we're looking for primarily.
Okay, got it. And then the next question, can you speak about the Rheinmetall contract? How is it going? Will we start seeing revenue show up in the earnings statement now that the contract has started? Do you feel this contract will be expanded?
Great question. So we are in full production now of the units. Everything has been, the way it works is you have to produce your first unit and have it tested out and proven. water tests, vibration tests, all of that. So all that's done has been passed, approved. So the client's accepted. We're on to full production. And full production looks like 25 units beyond that first one. So that's going to go for at least 18 months. And we've just started in this quarter, right, Dan? I think it's just this quarter.
Yeah, you'll see revenue in Q4 from this project.
Right. So that'll be about 18 months run rate. There is a clause in the contract for another 10 units, another tranche of 10 units. We're hoping that they approve. That hasn't happened yet, but if it does, you'll hear from us. But they seem to like the product. If you see it, it really is an elegant piece of equipment, and we're very proud of it. But it's up to the clients. But from what we see now, especially in Canada, there's a huge push for spend in the military. We've been woefully behind. In many ways, we should thank the U.S. for a little pressure because it was long overdue and necessary. And as a result, there's a high level of commitment to spend on the military up here. So we're encouraged by that. It definitely is going to help our cause on this and other contracts that we're looking at. I think in terms of Rheinmetall, the next step is continuing to build the confidence and the dedication of that relationship to parlay that into other NATO countries, and for us to be to satisfy the need to be in their catalog of solutions that they market to other clients. And we're working on that now. Every indication is that that's going really well. They like what it is that we do. It's the first and only water product that Rheinmetall is actually ever engaged with. And when you're 99% of your business is ammunition and tanks and that kind of thing, to be able to produce something that goes into battle and produces water, or goes into devastated area and produces water, I think that's a good add to their bag of tricks, and I think they see that. So we're excited about those possibilities. But again, I don't want to overdrive my headlights here, and we'll see how that evolves. But that's definitely underway.
Yeah, that also fits with the next question from the audience, which asked whether you can speak about the new European shipbuilder contract and relationship, and whether you think that BluMetric could break into the European market as well, given the military spending overseas.
Well, I would start with we're not starting as of today marketing in Europe. We've been doing that for a while, making sure that we're building our brand, our name awareness overseas with key NATO countries. So they're aware of us. We did have an ask from the UK DND about a year ago for our smaller units we're building with Rheinmetall. And unfortunately, that ask, or at least that proposal, was put on hold just because of the sad nature of the Ukraine. It was they needed bullets more than they needed clean water. It's just that simple. So maybe we're really early on that opportunity, but in time, I think that will evolve. But there again, I think having Rheinmetall based in Germany, who understands our product, they're a huge organization. They market internally to themselves. They become more familiar with our product. We don't need to have brick and mortar in every NATO country. We need to have the relationship with someone who does, and they definitely represent that. Add to that this recent contract we got with Thales, like a Rheinmetall, only French. Same thing. Thales has picked up the contract to oversee all the operations and maintenance for the Royal Canadian Navy. And so we do have shipboard systems. We don't talk a lot about them, but probably should more so. If you're in a Royal Canadian ship, the chances are if you're drinking clean water, it'll be out of one of our systems. So we have land-based systems. We also have ship-based systems. A couple of years ago, we finished a $20 million contract with Seaspan, which is a large shipbuilder on the West Coast in Vancouver, and it was to produce water purification systems for all the new ships that they were building for the Canadian Navy. The thought there is Seaspan builds ships for every Navy. So you have them as a key client. We can definitely see visibility into opportunities in other countries and other navies just through that. So great opportunities, without a doubt. And they like our systems. They do hold up. I've had conversations with with many a high-ranking official in the Department of National Defense that praises what it is that we do. And they say without clean water, there's no mission. And so we appreciate that they understand our value proposition.
It's
Perfect.
interesting, just to add some context to this, we're talking about military, which are large contracts, but the sales cycles are extreme. We're currently bidding with 2 partners on the Canadian submarine program to outfit a dozen submarines. That probably won't start being built for 5 or 6 years from now, but it's that type of timeline that we're dealing with the military. This is what makes Gemini unique. That's commercial development, and builders have a timeline that's very different than the government's timeline, and that's why we can turn those projects around in less than a year from start to finish.
Okay, perfect. Then maybe now shifting gears from water tech to the professional service side. I think it's fair to say the last 2 quarters have been a bit challenging on the professional service side, while very successful on the water tech and Gemini front. So what exactly, or maybe can you just speak a bit about the softness in the last 2 quarters that we saw on that side of the business?
One of the most challenging decisions you have to make in this position, especially where professional services is concerned, is like I said, our people make the difference. Without the right resources, you can't market or execute on the solutions that the clients need. Procurement within, or the contracts that we had, especially within the government, were all pushed to the right. They all were delayed. Canada has a new prime minister. We have a new administration, dealing with the new administration in the States too, but more so up here. A lot of our work was basically put on hold. When that happens, you have other contracts you're working on, but the idea is to have the highest utilization you can possibly get with your professional services on contracts, so they're not on your cost side. You're on the invoice to the client. And when things slow down like that, the knee-jerk reaction that would happen, perhaps from a less mature management team, would be just make cuts. Just got to cut. You have to cut, bring that down immediately, and then when the contracts come back, you got to bring them all back. Well, the reality of that situation is you might do that once, but you'll never hire them back, and you won't get those people back, and you won't get that work back. So you have to kind of float that part of the business, and then when it comes back really strong. And that's what we're seeing in Q4. We're receiving our due, being paid back for our patience, I guess is the better way to put it. All those things have re-engaged again. So that was one of the bigger, hard to swallow quarters that we've had to swallow, relative to making sure we float and invest in our people so that they can be there for the clients when the work all showed back up again. So those things are episodic. They do happen. They don't happen, hopefully, all the time. We do see some seasonality. You will see that in the work, because a lot of this stuff happens out in the field. And so that's just part of the ebb and flow of the business. The trick is to do the best that you can to adjust and to carry when you need to. But if it lasts too long, then you have to make the necessary hard changes that you need to make in those decisions. And we'll do that too. We're not immune to that. But finding good people these days that are qualified, that can actually execute, that have the client relationships, it becomes harder and harder. So you want to make sure that you are always managing that very tightly. So that's what we did. And so, I mean, to the tune of, what was it, Dan, maybe $900,000 impact in Q3?
Correct. Yeah, 900,000 is the carrying cost for the additional.
Right. I take full responsibility for that. I know it was a tough decision, but when it all shows up the next quarter and it goes on through the next year, then we think we did the right thing. But the hire and fire mentality is not going to give you a resilient business. It's not going to get you where you need to go. But that's not to say that we're not focused on EBITDA. I want to make sure that you're the people that are on this call, or other investors interested in BluMetric, we understand the necessity to grow, but we also understand the necessity to produce an acceptable EBITDA. We threw numbers up there to say we have ambitions to get to 100 million, and at that scale, we should be able to produce 10% EBITDA. That should be expected. We look at the comps. We're always looking at, what others have done. We often get compared to many other companies that are doing closer to 8 to 10, some more. So that's what we put in front of our management team, and that's, as we get into our planning session for our business planning for next year, starting October 1. That's really on the top line. The heading of the story we need to write is, that's great top line growth. We can go from 35 to, over 50, heading to 60. That's all well and good, but you still have to put cash in the bank, and you have to have a solid business, and then you have to have it there to reinvest in the next thing. So we haven't lost our discipline, I guess, is the message I want to get across. And we understand that that's a critical piece of the ongoing aspect of growing the business responsibly.
What triggers can you pull on the consulting front to stabilize or maybe even grow revenues from here?
Well, there's a third leg of the stool that we talk about, and that is, we work in the natural environment, which is the work that we currently do in water and environmental. The second leg of the stool is technology. We're definitely well covered there. The third piece that we don't do enough of is the built environment. And we often team with other companies where we work with them on that. And we see some opportunities there that might be a good piece to kind of smooth that part of the business out. It's very complementary. For example, the largest built environment in Canada is Toronto. We don't really participate enough in that market, yet we have clients there. And there's a lot of ambitions for various aspects of infrastructure growth that we're not part of, that we should be. It's a perfect fit for our business. And so as you get bigger and as you broaden out what you do, you can't lose your focus. But as you diversify, then you become more resilient. And I think that's part of our strategy going forward. We'll see how that goes.
Okay, perfect. If I understood correctly, I was just re-listening to your latest earnings call in preparation for our talk. I think you mentioned the potential of not only an acquisition on the water tech side, but also on the professional service side. Is that correct?
Well, we definitely have, to the extent I can talk about it,
Okay.
we definitely have a robust pipeline. And
Okay.
I can tell you, we were far along with one company in Western Canada that we had to say goodbye to. It just did not pencil out. So we parted ways. We spend a lot of money to make sure that we have the right level of detail. We hire independent auditors to do a lot of the work for us, so that we don't skew or provide or we want to get something that is truly independent, so we can make good decisions. And so things like quality of earnings and stuff like that, we make sure that we've got the right professionals involved. So we said goodbye to one, and there are others. And Dan and I continue to cycle through. We're looking at how they're producing in this fiscal year, what the future looks like, what the fit looks like. Getting to know their culture and their people takes time too. So we don't rush it, but most certainly that's a big part of Dan's and my day, that we're working that pipeline. So we don't look at one or the other. We don't say we have to have one of these or have to have one of those. It's more important to us that we stick to our principles and our discipline. And as those conversations, those assessments prove out, then we'll make a decision. And if we made the right decision, it will make all the sense in the world to the market.
Okay, perfect. Well, I guess that's more or less all of my question. I don't know if you have any more, Ian.
Yeah, maybe I just had one question. Maybe you hit on it a little bit, but how do you intend to kind of attack the U.S. military opportunity? Is that going to take kind of an independent beachhead, kind of independent from Gemini? You have to stand up a separate entity, build. How do you intend to attack that?
Well, that's a great question, and it's definitely on our list. When I say that, it's very clear to us that to be successful in the U.S., it has to be in the U.S., designed by and executed by a U.S. operation. There is no delusion here. That's the environment, the business environment we're working in, and we have to respect that. We're not going to start building stuff up here in Canada and hope to ship it down and compete that way. Maybe we could, but the reality is there's no appetite for that. but we have the know-how, we have the designs, we have the ability, we have every opportunity that through Gemini, say that other 25,000 square feet next to them, and across the street from the Gemini facility happens to be FEMA. They say, we want agile systems. And they can now say, yes, we can provide those. It's a whole different division for Gemini to be able to light up immediately, take all of our know-how, all of our experience, and build that business overnight, right in that facility if necessary. The challenge we have is we don't know if FEMA is going to live. We don't know, where the administration's going with FEMA. The demand will be there, but it's to whom you sell to and how that procurement is going to happen. But the military side, we get calls. I mean, definitely we get calls from the USDND to say, we know who BluMetric is, we know your systems, we see them in the field, we like them. There's some nuances. They like them less automated. I don't know why, but they like more people to flip switches and turn dials than other clients do. But that's okay. That's their shots to call. But the other part of this too is, you may or may not recall, our former chair is another former old friend of mine who is a retired 3-star general by the name of Jeff Talley. And he's a great friend. Jeff has a PhD in environmental engineering. He has a master's from Oxford, an MBA from Oxford, and he has a master's in divinity. Who are you going to trust, right? And he's a 3-star general. So he's got all points covered. But Jeff and I do stay in touch, and I don't want to oversell his name or whatever, but Jeff's an advisor too. And if anybody knows how to crack that market, and everybody knows how to make it successful, it's not unlike me to call my old friend Jeff up and to say, how are you doing? And, I'm curious about this. What would I do to go about it successfully? Jeff had to step down from being our chair because he had a health event he needed to take care of. And we were insistent that he keep the main thing. And now he's healthier and he's doing much better. And, he's back on his feet living in Arizona. But we do have, in my past, I have a lot of good friends, and I'm very fortunate for that. And he's one of them. When he was at Notre Dame and I was in Chicago, he had his own tech business and he was consulting with me as well. We just became really good friends, just, for whatever it's worth. I don't know why he hangs out with a guy like me, but at the same time, we're very fortunate to have those kind of advisors to be able to lean into. And I would love to have a military division or I call it water resilience division within Gemini that sells into the American market. It'd be wildly successful if it was accepted.
Yeah, and it sounds like, to de-risk it, it probably makes sense to get your first order before, putting the CapEx into that type of expansion. Yeah.
Yeah, we only build to order, so that's one of our CapEx isn't too bad. We don't have 20 sitting on the shelf that we hope to sell. I mean, lots of D&Ds would love that, but no, here's the order, here's the spec, you approve it, and then away we go. And usually we get money up front and manage our cash accordingly.
Okay, well, let's leave it there. We appreciate the time going over the story, answering all of these questions. I want to thank you, Sebastian, for asking some great questions as well. And we look forward to following your progress. Thank you.
Thank you so much. Really appreciate it. Everybody have a great day.
Thank you.